Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, is trend following and momentum trading the same thing? Answer by Scott Phillips. An intelligent trading question, like a glass of water in the desert. Thank you. Trend following can be done a number of ways, but essentially it's being long the markets which are going up, and short the markets that are going down. Works great. Very low skill level to the execution. The systems are simple. A 5-year-old could do them. Of course emotionally they are ass puckering in the extreme. Momentum is slightly different. Momentum is generating a ranking methodology for stocks, usually by how fast they rise, and buying them in order to fill a portfolio. That's an oversimplification, but it's mostly right. Also, trend following works best on futures markets and doesn't work at all on stocks, without modification, since stocks have a lot of beta to the market. What I mean is that if you buy 200 different stocks which are making fresh highs, when the market turns, all 200 might go down. So you don't have 200 positions but one big fat one. As a general proposition, if you are looking at stock trading, momentum is for you. Futures and currencies trend following. Answer by Mark Montoya. No, they are not the same thing. A trend can last for days, weeks and even months and doesn't necessarily need momentum to continue moving. A trend is often marked by higher highs and higher lows, or lower highs and lower lows, but doesn't have to be. It's merely a sustained directional movement over a time. Momentum typically refers to the building of energy in a particular direction. For example, as part of an overall trend up, the market might be experiencing a lot of momentum to the upside, whereas the market may be in an overall trend up, but lacking any current momentum to push prices up and thus moving sideways, but still in an uptrend. You can have a trend without momentum, and have momentum without a trend. Think of trend as an overall theme, and momentum as a current state of the market. The next piece is tempo, which is very overlooked and rarely discussed, but as important as momentum to the day trader. As a day trader, I really don't care about the overall trend per se, but without some amount of directional momentum of price and or volume intraday, and we will trade in a tight range, and these are difficult to trade. These low momentum trading days can be good to scalp. If that is your thing, it's not mine. When you have momentum in price, coupled with strong tempo, if you can experience some quick moves up/down in price. For example, you could see momentum building to the upside but lacking strong tempo, so price climbs over the day, but in a steady controlled movement. Whereas when you have momentum to the upside, with a high tempo, you will see the market steadily climbing in price, coupled with some quick strong moves up because trading tempo is high. Buyers will come in with big volume at points during the day, as the momentum continues to build, and drive price up very quickly. By the way, this could all be within the context of a trending day or trending couple of days, etc. Hope this helps. Answer by Leo Altman. Momentum strategies is a particular case of trend following strategies. Momentum strategies based on the assumption that the price of financial instruments has some inertia. Momentum strategy building usually starts with finding the best way to detect the initial impulse, followed by some trend movement. Figuratively speaking, it's some of the attempt to jump into the moving train and ride it at least few stations. Here you can see the real examples of momentum strategies. Strat. Number 5, Strat. Number 3, Strat. Number 9.